After a roller coaster over summer, the averages are back to within spitting distance of their all-time highs. So how do we make sense of this market? We've had rotation after rotation as different groups rapidly go in and out of style on our favorite, the Wall Street fashion show. But we needed some serious longer-term leadership from mega capitalization companies with outsized influence in the Dow Jones Industrial Average. And you know what? We just might get it. That's why tonight we're going off the charts with the help of Dan Fitzpatrick. He's that terrific technician. He's the founder of Stock Market Mentor, as well as being my colleague at realmoney.com, because he's seeing some very promising patterns in two of the biggest stocks around. Two I know you own, Microsoft and Apple. If these two tech titans can break out to the upside here, Fitzpatrick thinks they'll pull the whole Dow higher. And after looking at the charts, he likes the odds of a breakout. See for yourself. Let's start with the daily chart of Microsoft. For the last few months, the stock has been consolidating. That's Wall Street speak for trading sideways after a monster run. At the moment, there aren't many signs of life here, right? I mean, it's just kind of... Fitzpatrick points out that Microsoft's 50-day moving average has been drifting sideways. The moving average convergence divergence, or the MACD, an important momentum gauge, is resting right on the midline, meaning there's no trend whatsoever. However, when you dig deeper into this chart, you can feel a pulse. While Microsoft traded sideways in August, it did so on lower than average volume. And this is exactly what Fitzpatrick wants to see. Why? Because when a stock is in consolidation, low volume means the big institutions aren't really selling the stock in any sort of quantity. They're just doing a bit of profit taking. And that's what we want. Meanwhile, look at these black lines that are called Bollinger Bands, okay? Bollinger, I used to be on when we first started here. He was on all the time. I love him. And they measure the level of volatility in a stock at a given time. Right now, the width between them is very tight. It's about 4%, which makes this what's known as a volatility squeeze. For technicians, volatility is cyclical. So when the bands get this narrow, that suggests they're due to expand sometime soon. Hey, maybe, meaning we're about to have a big move. How big? How big? Based on the rest of the chart, Fitzpatrick is betting that the move will be higher and it could be substantial. Microsoft's got a ceiling of resistance at 140, up roughly $3 from where it's trading today. If it can burst through that ceiling, Fitzpatrick thinks it could have a lot more upside. Well, that would be so bullish for the market. By the way, it's one of the AAA balance sheet along with J&J. All right, how about the daily chart of Apple, which we all know everybody's focused on constantly? In many ways, this chart is similar to Microsoft's. You've got a stock trading in a relatively tight range for the past few months. You got a rising floor of support. Look at this. I mean, it is the same, right? But there's a key difference here. Apple's already broken out above its ceiling of resistance at 217. The 200-day moving average has just started to turn up. That's the blue line, okay? You see that? The inflection right here. The 50-day moving average is trending higher. All good. Stocks made a pattern of higher highs and higher lows. This is exactly what the technicians look for. Fitzpatrick's favorite part, when Apple blew through the ceiling of resistance, it did so on higher volume. Volume is like a polygraph, and high volume means a move is telling the truth. When the stock then pulled back a bit on Friday and Monday, well, what happened? It did so on lower volume. That's precisely what you want to see. Hey, but plus, even during yesterday's decline, Apple held above 217, which suggests that the ceiling has now become the floor. Fitzpatrick recommends sticking with this one as long as the stock remains above its 50-day moving average, currently down about 6% from here. As for me, you know my view. Own Apple, don't trade it. Bottom line, the charts as interpreted by Dan Fitzpatrick suggest that Apple and Microsoft could both be ready to roar, potentially giving this market the leadership that it deserves. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.